Prices feel objective, yet someone whispers them into existence before screens confirm consensus worldwide every single day. London mastered whispering, shaping expectations quietly so markets move together, without obvious commands from distant rooms unseen. Owning assets mattered less than hosting conversations, where prices were agreed before trades executed calmly nightly elsewhere. Thus price discovery became power, exercised through meetings, calls, and tone rather than inventory or warehouses anywhere. Historically, merchants trusted London fixes because neutrality reduced quarrels among rivals, needing common numbers each trading morning. Gold, silver, oil, freight, insurance, currencies all found reference prices inside London's routines shaped by habit daily. Fixing calls gathered banks and brokers, aligning bids until a single benchmark emerged accepted by everyone present. Once published, that number guided contracts worldwide, anchoring trades beyond London's direct reach for months, sometimes years. Whisperers mattered because markets follow stories, and stories travel faster than data alone during volatile, uncertain moments. Analyst notes, broker color, and morning calls framed narratives before prices moved decisively across regions globally daily. Tone signaled scarcity or surplus, confidence or caution, shaping risk appetites subtly among funds, treasuries, firms, states. London excelled at this theatre, balancing information, discretion, and credibility honed over centuries of commerce tradition quietly. Benchmarks multiplied, from LIBOR to FX fixes, centralizing influence without owning trades directly or visibly anywhere else. Critics warned manipulation risks, yet users preferred familiar processes over fragmented alternatives lacking trust, depth, liquidity globally. Reforms followed scandals, strengthening governance, while preserving London's convening role within markets needing coordination, stability, continuity always. Even reformed, benchmarks still began with conversation before calculation finalized outcomes under pressure of deadlines, trust, habit. Time zones amplified advantage. London bridging Asia's close and America's open seamlessly, volatile overlapping hours daily. Liquidity congregated where voices met, reinforcing the whisperer's relevance through repetition across cycles, crises, recoveries, decades long. Digital trading accelerated execution, yet pre-trade consensus still steered direction via chats, calls, notes, briefings, daily, everywhere. Thus ownership mattered less than orchestration, guiding flows others supplied with capital, assets, risk, balance sheets, globally, continuously. During crises, whisperers calmed markets, coordinating expectations before official statements arrived to prevent spirals, freezes, panics, spreading. That calming premium became priceless, attracting participants seeking steadiness over speed amid shocks, rumors, leverage, stress everywhere. Regulators tolerated whispers because outcomes aligned with stability and orderly markets during transitions, reforms, enforcement, cycles, often. Power stayed informal, plausible deniability preserved through decentralized conversations spanning firms, desks, phones, rooms, cities, nights, endlessly. Competition arose elsewhere, yet fragmenting trust proved harder than building towers. Incentives, subsidies, platforms, brands, quickly, repeatedly. Without shared memory, prices splintered, increasing disputes and hedging costs for producers, consumers, financiers, insurers, governments alike. London's whisperers offered convergence, compressing disagreement into tradable numbers, acceptable across contracts, jurisdictions, cycles, time, zones, worldwide. Acceptance, once habitual, sustained dominance without coercion or ownership through trust, precedent, repetition, professionalism, continuity, reputation, alone. Today, algorithms assist, but humans still set context. Markets obey through judgment, nuance, timing, credibility, relationships cultivated. Whispering adapts, migrating to secure channels, while preserving discretion amid surveillance, compliance, audits, reforms, scrutiny, pressures, constant. As long as prices need agreement, conveners will matter because coordination reduces risk, friction, volatility, uncertainty everywhere. London built the convening craft, and the craft sustains London through cycles, crises, reforms, competition, innovation, time. Ever wondered who really pulls the strings in the world of high finance? It's not always the loudest voice in the room. For centuries, London's financial district, the city, has been home to a secret society of sorts, the financial whisperers. These aren't spies, but influential figures who built empires on trust, subtle hints, and quiet conversations over a pint or a handshake. Back in the day, before fancy algorithms and instant messaging, these whisperers were the original market movers. Think of the old coffee houses on Lombard Street, where brokers and bankers gathered. A raised eyebrow, a quiet word, that's all it took to signal a major deal or shift the market. This network was built on reputation and personal relationships. Information flowed through trusted channels, making or breaking fortunes in a matter of minutes. It was a world where your word was your bond, and inside knowledge was the ultimate currency. Then came the Big Bang in 1986. This wasn't an explosion, but a massive deregulation of the London Stock Exchange. Suddenly, the old boys' club was thrown open. Technology surged in, and traditional face-to-face dealing was replaced by screens and electronic trading. Stricter regulations were introduced to create a more transparent and fair market. Many thought this would be the end of the whisperers. How could their subtle influence survive in a world of compliance officers and digital footprints? But they didn't disappear, they evolved. The modern whisperer operates in a much more complex environment. The conversations might have moved from smoky backrooms to encrypted messages or discreet lunches in Mayfair, but the core principle remains the same: building trust and leveraging relationships. Today, they are the hedge fund managers, the senior bankers, and the private equity titans who understand the nuances behind the numbers. They don't share illegal inside information. Instead, they trade in what's called market color, the sentiment, the mood, and the subtle shifts that data alone can't capture. They piece together fragments of public information, analyst reports, and their deep understanding of market psychology to form a clearer picture. It's about connecting the dots in a way that no computer can. This quiet coordination, this web of trust, still gives them a significant edge. It allows them to anticipate market movements and navigate volatility with an almost uncanny foresight. So, while the tools have changed, the human element in finance remains as powerful as ever. The whisperers of London prove that in a world drowning in data, the most valuable insights often come from a quiet conversation and a trusted relationship. The city's secrets are still being shared, just not in the way you might think. Thanks for watching. If you found this interesting, don't forget to like this video and subscribe for more deep dives into the hidden world of finance. See you next time.